thing where you have to watch. It's like three card Monty. You guys know that game with the cups and you have to try to find the ball underneath? It's important to realize that normally the correlation is all risk assets move in the same direction. And so stocks and crypto are moving in the same direction. Right now, this sell-off in stocks is being mostly led by the risk of tariffs. This, which doesn't impact cryptocurrencies because cryptos are a digital asset. There's no physical goods or supply chain being impacted. The tariffs are impactful because of these supply chains. If the screws, the nuts, the bolts, the raw materials of making these goods is going to go up in price because importing them is going to be more expensive, then the final product will be more expensive. All right. So there is this massive risk of this inflation spike. I think that there is a genuine, that's why like NASDAQ and US 30 are feeling the hit, but cryptos, I mean, cryptos are retracing, but they're not necessarily crashing at the same rate as the stock market is. I think this is more of just like investors trying to get cash together so that they can invest at the true bottom. Now, for cryptos, I do see one more leg down. I actually really want to see one push to the downside. Members, 886. Now, this is really important. We've had a massive shift in policy in the United States. It went from, hold on, let me make sure we're live on YouTube. So the US kind of went from being harsh on crypto to now having this policy of trying to become the global leader. So that change means we've seen what the market does when crypto is a niche asset and there's only like really a small percentage of the population invested. When we're trying to become the crypto leader in the world and the government and the SEC and the CFTC are actually encouraging development, they're encouraging investment, and they're encouraging mergers and acquisitions, we're going to see a bigger pump than we've ever seen before. And so if you're not heavily invested, or I mean, shit, even if you are, the best opportunities come from when the market is retracing, when the market gives us a better and discounted price. So buying Bitcoin at 70,000 is way better than buying Bitcoin at 80,000. Now, are you going to get rich by buying Bitcoin at 70? So you put $1,000 in, and then it goes from 70 up to 104. Your $1,000 is going to be sitting at about 1,500 bucks, give or take. Call it 1,400 bucks. So that you're not really going to get rich off of buying Bitcoin, even though Bitcoin is the best asset that's ever existed. What you can do is, and this is not financial advice, it's what I'm doing, is I'm going to be using these altcoins and these meme coins to leverage my capital and make high leverage returns. So I'm looking for like 20x, 30x opportunities. So that $1,000, instead of going to 1,400, I'm looking for that $1,000 to go to 15 or 20,000 or 30,000. Knowing that if I buy 10 or 15 instruments, most of them are going to go to zero because it's a high risk system. But the ones that do the 10x, 15x, 20x, 30x, 50x returns, those are going to get converted over to a main coin like Bitcoin. All right, so I'm using Bitcoin as a proxy for the overall market. So now that we're seeing, ideally, this bigger retracement, if there is an 80,000 down to 70,000 shift, that's about 10% or whatever the percentage is. That's a massive discount across all of the assets in the crypto market. And so so I'll go through and kind of look for those coins that are dipping along with Bitcoin that are correlated, try to get those on the floor. So let's see if we can just quickly look at XRP and Solana. XRP is making its way back. We have this beautiful range, 88.6, the whole nine. It's making its way back. We may have a break of this 197 or this $2 low and go a bit lower. These are the opportunities where you can buy Bitcoin at a massive discount. Like $1.50 would be magical, or even lower. Solana, same thing. So if you look at where the highs are from earlier this year, $300, and now prices at 124. So less than 50% discount, or more than 50% discount, excuse me, from the highs. All right, so pay attention to cryptocurrencies. The end is near, the floor is close, and that's really what we're going to be looking at. Welcome back, everybody. If this is not your first stream, if you guys have been watching us for a while, appreciate you guys hopping on the Chartaddicts live stream. Quick reminder, NASDAQ webinar registration ends on the 4th of April. Make sure you guys register before seats pack out. If you guys want to learn the greatest strategy that's ever been developed for day trading, the riskiest asset is NAS 100. These indices they give traders a lot of trouble because they're high risk, high reward. But if you guys want a system that's tried, true, and proven, make sure to check the link in the description. Register for the masterclass today. All right, let's talk about NASDAQ. And actually, before we do that, let's actually go through to Forex Factory and look at the data releases for the week. So April 2nd, Trump tariffs, that's the number one focus for all of Wall Street, for all investment markets. Everyone is watching for the potential impact of Trump's tariffs on the economy. April 2nd. So the uncertainty of what's going to happen is what's causing most of the sell-offs. And so regardless of what the effect is of the tariffs, keep this in mind. It doesn't matter what the result is, as long as there's clarity. That's what the markets are going to look for in order to rally. So if you guys are looking for when is the bottom or when is the rally coming, you have to look for whenever there's certainty. So if the Fed comes out and makes a definitive statement, there's certainty. It doesn't matter if the interest rates are going up or down. What matters is that the investors, these giant capital allocators, have a game plan for the next 6 months that they can follow. And so that's what I'm looking for after April 2nd. Hopefully we get some clarity about which companies are exempt, because that's going to give us an idea of like the impact to GDP. You know, if the automotive industry is a massive producer for the US, if that takes a hit, it's going to have a more significant impact on GDP than, let's say, the wine sales coming out of France. And so hopefully some clarity after Wednesday is going to give the market some calm. It's going to give the market some confidence to start rallying. And so I do not expect the market to bottom until we have some clarity there on Wednesday. After that, I'm actually expecting a massive rally, whether it's this week or next week. I do see the market rallying very aggressively, and the bottom is close. All right, let's take a look at what we have this week. Pretty busy week. Tuesday, JOLTS jobs openings. This is going to show the number of open jobs in the economy. So this shows slack versus total efficiency. Total capacity. Are all the people who are able-bodied, willing to work, working? And right now, I think we have about 4 million unemployed folks that are registered as unemployed, and we have about 7.7 million open jobs. So we still have some slack in the economy. We're not operating at full, and this is actually a pretty good sign right now. We have the ADP early numbers, and of course, first Friday of every month, we have the non-farm payroll numbers. So the early estimate from ADP, the private company, they're never right, so I don't really care about the expectation here. We have PMI, the Producers Manufacturing Index, which is like the inflation measure for producers. This is the topic of the town. We got Thursday, which is the day after the tariffs go into effect. We have ISM Services Manufacturing. We have the PMI number. So I'm looking forward to this one. This is going to be a pretty interesting one. We have OPEC meetings all day Thursday. These are tentative, and so they're going to be meetings throughout the week. Obviously, the government's kind of like main tool to fight inflation and to bring the inflation numbers down artificially is to impact housing and energy. So if you can cut a deal with the Saudis, get some cheap energy coming in, inflation goes down on a month-by-month basis. That's why they separate headline inflation versus core inflation. Headline CPI and core CPI, and then headline PCE versus core PCE, because the energy numbers are probably the easiest to manipulate. You make a deal with Venezuela like Biden did, go and beg them for oil, or we make a deal with the Saudis. And so really what OPEC mostly discusses is production versus supply on the market. And so you can pump, like they'll basically try to agree on limits that every country is going to adhere to in terms of how much oil they're going to pump out the ground. And everyone's expected to play nice. Not everybody does. Let's be honest here. The other side of this is how much money or how much oil they can dump on the markets, because that's going to impact the prices. Saudi Arabia is the lowest cost producer of oil in the world. They're probably a quarter of the cost to refine and produce their oil. They could undercut the U.S. Crush our entire export of U.S. petroleum. Russia, lower cost producer than the U.S., another big issue there. If we work with Saudi Arabia, maybe we can lower the cost of oil all around and then kind of put a halt on Russia's ability to keep funding their war because the majority of their GDP comes from oil. So these are all tactics that are going to be played. Our representatives in the State Department and the Foreign Trade Commission, whatever that thing is, they're going to go and meet with the foreign representatives. Saudi Arabia, OPEC is the organization for oil producing countries, and so you have like OPEC plus includes Saudi Arabia, US. Um, God, I'm spacing on all the countries, but pretty interesting stuff. Then Jerome Powell is speaking on Friday about what? Society for Advancing Business Editing and Writing. Society for Advancing Business Editing and Writing in Arlington. Oh, that's down the street from me. What the fuck is this? Yo, somebody help me explain this or help me understand this. Society for Advanced Business Editing. Da da da. But what the hell is the Society for Advanced Business Editing and Writing? What the hell is business editing and writing? Lord have mercy. All right. Whatever. Have we had students take payouts? Can we have somebody answer this question in the YouTube? Have we had students get payouts, brother? Imagine that. Imagine us providing an educational service and the service doesn't work. That's madness. But instead of me saying it, we'll let somebody that's already taken the class answer that in the YouTube. All right, members, this is pretty cool. All right, this is like what? It's like a full moon. All right, we have this on the higher time frames, 4 hour, phase one, phase two, and then straight into a daily liquidity zone. Put a 1 in the chat if we're seeing what I'm seeing right here. Put a 1 in the chat. So we have everything lining up. We have the higher time frames. We have the higher time frame fib. All right, we have the market respecting these fib levels. So we have the 78.6 fake out. And then now we're seeing the heartbeat start to form, which is our entry model. Now we have phase one. We have phase two. And then the entry model is going to be break through the zone, try to get an entry as close to the double bottom as possible, wait for the pump, look for the 88.6 retest on the smaller time frame, and then take it to TP1, which is going to line up with the top of this range. If we break TP1, then we go to TP2, and you guys know the drill. So regardless of whether we break through this TP1 zone, regardless of whether we break or not, this is going to be more than enough money, more than enough market action and movement in order to make money for the week. Okay. Even here on live, if you've seen at least one live last 2 weeks, you would hear or see an army getting funded on Apex. Yup. You're expecting a recovery this week. Sorry, just covered this, just joined. Maybe this week, like what I'm really expecting is if we're gonna look at how the stock market typically moves around news weeks. Right now we have the initial pump. And we teach all of this in the class, by the way. The two different models, the weekly models of NASDAQ, you either have fast start, slow middle, and then release at the end, or you have slow start, shaky middle, and then recovery at the end. Right now, we're having a very sharp market open, and so we're expected to have that kind of version one. We're going to have a sharp market open, okay? Probably a slow middle of the week, big whipsaw here, and then that's when we're going to see the recovery. We'll probably get a small recovery this week. Next week, we'll have like probably one more sell-off, and then we'll see the real recovery. This week, I am expecting longs at this daily zone. So that's going to be my number one focus, catching those longs. Once we get to this area right here, this is where I'm going to scale down to the 1 hour and the 30 minutes, and then look for that entry below the zone. Okay, wait for the market to set itself, wait for the market to establish that structure, consolidate, and then find your range using that consolidation structure. Okay, drop a like on the YouTube stream if you guys are watching. It'll help the algorithm push this thing to people who really, really need it. Okay, any questions, comments, concerns? You guys want me to cover any pairs? If you guys are members, you guys want to throw out something for me to cover, I'll cover it, whether it be news related, whether it be charts, or a specific trade idea that you have. You guys can send your markups and I'll critique them. So if you're on the Zoom call, if you're a Chartaddicts member, you guys can send your markups, send your trade ideas, call out a specific instrument. I'll be able to check all of those. Probably take another 5-10 minutes, and that should be a great start to the week. All right, register for the online masterclass if you guys want to learn how to trade this strategy. And of course, if you guys are interested but not really sure just yet, need a little bit more info, we have weekly webinars every single week. You guys can register for the free webinar, get some information, and we also teach a free lesson in these. So if you're one of these folks that says you don't have the money, you can't afford a course, you're still trying to get your footing in trading, this is going to be a great opportunity for you to get some sauce, pick up some game, and do that for free. Really get some insight. Okay, so make sure to check out that link in the description for surely. Anybody, we're good to go. Members, put a 1 in the chat if you guys are ready to leave. We're good to go. Tomorrow we'll do a pre-market stream. So what we're going to do is, like, as a squad, we'll probably spend about 15-20 minutes doing pre-market analysis, looking at the lows of Asia, looking at the lows of London, establishing our structure, establishing those 2 potential entry zones. We'll do that before we start live streaming so that all of the levels are set. When we get into the streams, everyone's levels are already marked off. We have alerts set, and that way we can just jump right into get into this money. Yeah. All right, JLP, everybody who signed up for the affiliate partner program, make sure to check your messages or your emails. I'm going to be sending out an email right after this to lock everybody in for a call, get through some details, kind of talk about what the program is going to look like and some of the benefits. You can only apply if you're a Diamond member. So if you guys are in the Zoom call right now, you're eligible. If you're watching this on YouTube, go through the masterclass, and you guys will have the eligibility. All right. All right, everybody. Let's get ready to crush it this week. Higher time frame showing bears are in control to start the week off, but we're heading into a daily liquidity zone. Looking forward to trading at those higher time frame levels using our lower time frame execution system. All right, people, happy and safe trading this week. Remember, trading is not about being the best. Trading is not about being perfect. Trading is not about catching every single market movement. Trading is about having a clear system and having the understanding and maturity to know that it's not going to be exciting. You're going to show up and rinse and repeat. And then if you're doing that correctly, you're going to lift your head out of the water in about 6 months and realize that your life is completely changed. You have all the opportunity in the world. You have money to invest now. You have money to pay your bills and to be able to pay off debts. That's the real key here in trading. So don't sit there and aim for perfection. Don't think that you have to understand every single market movement. Keep it simple, rinse and repeat. Let's get